Welcome everyone to another session of TriTech University. My name is Bill Steppen, and today we are going to be looking at we're going to be starting a month on accounting. We're going to be diving into all the wonderful intricacies that are made up in accounting. And so we're going to be starting off today's session with looking specifically at kind of an extension of what we talked about when we were covering our overview of the modules specific to accounting. That was general ledger and accounts payable. We're going to be diving into an extension of those, starting with some checking account coverage, how that all works in the MSI, and then making sure that everyone here knows how to reconcile their checking accounts every month. So we're going to be looking into that. First of all, if you've never attended one of these sessions before, welcome. I hope you get a lot out of these. We use GoToWebinar when we do these broadcasts, and you're going to have a toolbar on your screen that you can use to interact with me. The primary way of doing that is there's going to be a questions box in that GoToWebinar toolbar. If at any point you have a question on the topic or the content of today's session, feel free to go ahead and type it into that questions box, and I will do my best to answer those as we go along. We'll also have plenty of time, I believe, for a full-fledged question and answer session at the end. I highly doubt we'll go the full hour for today's session, so just kind of keep that in mind. That being said, if you are on a smaller screen, if you're looking at maybe a smaller desktop, or you're using a smaller laptop, or even if you're attending this via a tablet or even a smartphone, if that tablet or that GoToWebinar toolbar is taking up too much screen real estate and you're having a hard time seeing what we're looking at, there's going to be a little box. It's going to be a little orange box with a white arrow on it. You can click on that or tap on that, and that should shrink down the toolbar, get it out of the way so that you're able to see what I'm presenting. So with that being said, if you kind of see me glancing over here, I'm just making sure that I've got any questions coming in my line of sight, that you're still able to hear me, that you're still able to see me, all those wonderful details. So I'm also going to give a couple of disclaimers. First of all, I got a new computer here that should hopefully allow me to broadcast and present here a little bit smoother. Not that that's really relevant to the recording or anything like that. But if there's any random glitches or anything like that, I'm still doing my best to work out any of those little bugs and glitches and stuff. So bear with me, give me a little bit of grace with that. I got a new camera. You can probably see my dying plant over here. So that's all wonderful now. And the other disclaimer that I want to give is I am certainly by no means a CPA or a bookkeeper or even an accountant by any stretch of the imagination. I have taken some accounting and financial accounting and business accounting courses, so I know a little bit about how debits and credits work and all of those wonderful things. But my primary goal here, not only today, but throughout the entire walk of my time here with TriTech and with you as our clients, is to make sure that you have an understanding of how the accounting works in MSI. If you have any accounting specific questions, such as what balances should be where, or how your actual chart of accounts should be set up with what accounts and stuff like that, those are great questions for your actual accountant. They're the reason why they spent all that money to go to accounting school, so that they can actually answer those questions for you. So without further ado, let's dive into MSI. So you should all be seeing my screen. We are using a music system that I just have loaded up here. So again, if you're not a music store, the content is going to be specific to the music, but the process is going to be the same regardless of what business you are. So the way that you keep track of your checking accounts in MSI is every single account basically is going to have a ledger account in MSI's chart of accounts. If you want to see your chart of accounts at any point, you can go into maintenance, you can go to ledger, and then you can go to your chart of accounts. So in chart of accounts, you should have two checking accounts by default, assuming you haven't changed your defaults, that should be there, that are labeled checking account number 1 and checking account number 2. And they're going to be 108-1 and 108-2 respectively in the chart of accounts. And again, if you attended just the mechanics course I gave on general ledger, you know that these 100 accounts are your asset accounts, and specifically these are current assets grouped as cash on hand and bank. Basically, the way the groupings work is any ledger accounts that have that grouping are going to be bundled together on their relevant reports, either the balance sheet or the income statement. In this case, it's going to be a balance sheet account. Basically, any accounts less than 400 are going to be going onto the balance sheet, and any accounts 400 and up would be going onto your income statement. The balance sheet accounts would carry a balance every going forward, and then the income statement accounts would have their balances zeroed out and the overall profit or loss put into retained earnings. Just as a refresher if you didn't recall that, or again, if you didn't attend any of those classes. Now, simply creating ledger accounts in the system and calling them checking account does not actually tell AMSI that these accounts are bona fide checking accounts. And the idea behind that is checking accounts can show up in certain portions of the program for use in making payments or receiving deposits and things of that nature. So for example, let's say you want to have a checking account that you make payments out of, whether it's for bills or other expenses or payroll or anything like that. If we go to the main menu, go to modules, and go to ledger, and let's say we just wanted to tell the system that we were writing a check, we could go to check disbursement. Well, when you go into check disbursement or any other program that is essentially withdrawing funds from your checking account, you'll notice that there's a drop down up here called credit. I'm going to grab my little highlighter tool, and you'll see that there's a credit field here. So anything that is set up as a checking account, if I go ahead and get that now out of the way and click on this drop down, you'll notice that it says checking account number 1, as well as an account called vendor prepay clearing. Now this vendor prepay clearing we'll talk a little bit about in more detail, but you'll notice that the checking account number 2 is not there. And the reason for that is it hasn't been properly defined, if you will, or labeled as a checking account. Now, the way that you go about doing that, and this is going to be very handy if you have multiple checking accounts that you would like to have show up in these credit drop downs, in your bank reconciliation, things like that. The way to actually define them is back in maintenance. So if we go back to maintenance, and then we go to ledger maintenance, and we're going to take a look at the system categories. Now in AMSI system categories, these are basically ways that the program usually looks at a category to determine whether or not certain ledger entries need to be posted when certain transactions happen. But in addition to that, it can also use this for determining extras, such as, in this case, which accounts are your checking accounts. So in particular, what we're going to do is we can use this description search filter here to start typing in check, and you'll notice that it brings us to a ledger or a system category line item 1818 called checking account. Notice how over here in the corner, I'm going to highlight that, but of course that's probably not very easily readable if you're on a smaller screen. So I'm just going to read aloud. That says this table indicates the ledger numbers used for checking accounts. Various programs refer to this, such as accounts payable, check writing programs, and etc. Now notice over to the left bottom corner, again, I'm going to grab a little highlighter tool and just kind of outline this box here with my you know what I'm trying to do there. So basically, again, I'm using not a mouse, but what are these things called? Doesn't matter. I'm horrible with it. I'm trying to learn it, but I'm horrible with it. Anyway, over to the left bottom side basically is where you define the ledger accounts that will be recognized as checking accounts. And notice how when you hover over it, it says drag between grids. So if we want to take 108-2 and define it as a checking account, we find it on this list in the bottom middle, and we click on it and drag it over. And you'll notice that it basically gets added as a third reference, 108-2 checking account 2. We'll go ahead and save that. And as soon as we save that, now when we go back to modules and ledger and check disbursement, you'll notice that in the drop down here, we now have checking accounts 1 as well as checking account 2. So basically, by adding any ledger accounts that you need to that system category 1818, it will be recognized as a checking account. Now, if you need more than just those two, if you've got other checking accounts that you want to keep track of balances or deposits, etc., it's a simple matter of back-end maintenance and ledger and the chart of accounts like we started off. You can always add additional ledger accounts here. You simply click the add button, and then I would recommend kind of keeping to that formula of the ledger account 108 being your checking related accounts, and then we already have 1 and 2. Let's make this one checking account sub 3, so 108-3, and this could be checking account number 3. And if you want to, you could always go back and relabel these accounts. So for example, maybe you specifically want to define checking account number 1 as US Bank or American Family or First National or whatever you want to call it. You can define it by simply overriding the description. So I'm going to keep it as is just so that we can kind of recognize it for without having to label it in any way, shape, or form. Now, for those of you who are running multiple store locations, my recommendation, because there's really no limitation on the number of ledger accounts you can have, is to, let's say you have a checking account for store 1 and a checking account for store 2. Technically, the way that the ledger works is it does keep track of separate balances per location. So technically there is one balance for 108-1 location 1 as well as 108-1 location 2. They do have separate balances, but just for ease of purpose, my usual recommendation is to kind of define the checking account per location, because you're not going to be able to call the bank and say, hey, what's the checking account for that specific location. Now that's assuming you have a specific checking account defined for each location. If you are running multiple locations out of one checking account, then technically I would recommend just doing it all through the one ledger account. Now again, they are going to keep separate balances, but on things like your balance sheets and stuff like that, you can consolidate the balances for locations. You could say consolidate locations, and then it would show you the actual balance for that ledger account across all of your locations. So hopefully that makes sense. There's technically no real wrong way to do it, just as long as you are remaining consistent across your different locations, assuming you have different people accessing it and posting entries to it. So that defines what a checking account is. Now, basically, the way that this works as far as the balance is anything that you deposit into that checking account, that ledger account, would constitute a deposit into the account. And of course, the opposite is also true, where any amounts that you pull from that balance would then reduce the balance of that checking account. Now, in accounting terms, because that is an asset account and we're working with debits and credits, and again, I'm not a CPA, so I can't officially really define why this is, but it's basically just general accepted accounting principles. Whenever you debit an asset account, you're actually adding money to it. And whenever you credit an asset account, you're removing money from it. So basically, when you do a overall debit entry into the 108 account, it's going to add to that balance. And then when you post a credit to it, it pulls it away. Now, there are programs already basically set up in AMSI that do this for you. You could actually do this through just manual journal entries, which we also had talked about in that module mechanics class on general ledger. But why not make it take advantage of the programs that are already there? So let's say that you wanted to write a check out of that system. Well, again, if we go back to modules and ledger and check disbursement, by selecting that account, that crediting account, basically whatever you then do as far as the rest of this disbursement, let's say you put in $50, well, that's going to be a $50 credit against that checking account number one. So the only thing you really have to define then going forward would be the amount of the debit or the accounts that are going to be debited. So let's say this is just a supplies purchase. We could go ahead and look up the ledger account for supplies, so 626-1. Let's say it's for the full $50. We could go ahead and add that. And by saving that, that basically then would have that check number up there that you see, in this case, check number 5001. Let's say we wrote that to Staples or Walmart, or it doesn't even really matter. Basically, those are just additional details. We could go ahead and save that, and that's now a $50 credit against that ledger account for that date. So that's basically how that works. Now, the opposite is also true for when you are making deposits into that account. How do we get money when you're in a business? Well, you're usually selling products and services. So the way AMSI works, and we're going to be getting into a lot more detail with this when we get to our webinar on clearing accounts, which if I remember correctly is, well, it's either later this week or it's 2 weeks from now. I forget exactly the date on that. But as you receive money throughout the day, throughout the week, etc., for the goods and services that you sell, AMSI is keeping track of those balances in what are known as daily clearing accounts. And then usually whenever you're going to record that you are depositing those, either at the end of the day, on your way home from, from the store, or the next morning, or whenever it is you're going to deposit those, you would usually go into modules and daily posting and daily deposit. Basically, this daily deposit program, what this is doing is this is keeping a running tally of the different ways in which you collect payments. So cash clearing, check clearing for customers who write checks to you, the various credit cards that you accept, Visa, MasterCard, Clearing, Discover, American Express. Notice how these are all linked to over to the left where it says 108-1 checking account number 1. The idea is whenever you have money in these various accounts, it's going to take that balance from these accounts, which it's been accruing all day long via sales, and it will remove it from there and it will put it into the deposit account. So let's just kind of see this in action. This is a brand new system, so there should be literally no other ledger entries except for the ones that I'm posting during this session, such as that $50 check that I just did. Let's do a quick sale, and let's go ahead and sell just 20 RT14s. And if you're familiar with RT14s, you know that these are my throwaway SKU that I use in pretty much every system. We're just going to say that that was paid, let's say it was 30 bucks in cash, so 20 and 10, and the rest of it was a check. So I'm going to go ahead and click the check button. It's going to ask for the check reference. I'm going to say that was check 1002 from the customer. We'll then go ahead and finalize that. And of course, it would normally print its receipt at this point. I'm not going to print the receipt because that's not the purpose of today's webinar. But now when we go back into daily deposit, you're going to see that it's coming up with $30 of cash that it wants to deposit and $39.55 in checks that it wants to deposit. So it doesn't just go straight into your checking account. The idea there is you haven't actually deposited it yet. This is a real-time system. So technically, whenever you look at the actual balance of 108-1, or whatever the checking account ledger number is, you should be seeing the actual balance of your checking account at that moment in time. Because these are sitting in your cash drawer or back in your safe or anything like that waiting to be deposited, they have not yet been deposited. You don't want them to just get immediately lumped into 108-1. I know that some other point of sale systems have, instead of just these individual clearing accounts, they might have like one kind of intermediate account called undeposited amounts or something along those lines. That's essentially what you have here in these cash and check, etc. clearing accounts. Now, if we were to go ahead and save this, which we will, but just not yet, let's see what would technically happen. So we'll go ahead and I want to just point out a few fields on this screen before we go ahead and move forward. So notice how up here at the top is the location. So this is going to be specifically a deposit at a specific location. There is no option for doing all locations in this case. Notice how there's a cutoff day and time. So that basically when I entered into this program, as well as a posting date. So depending on the way that you go about doing your deposits, if you deposit into a night deposit box on the way home or on your way to the store the next morning or whatever the case may be, the posting date should technically be as of the date that you want it to impact your general ledger. So let's say that you don't get a chance to actually count the drawers until the next morning, but you want it to be posting then as of that morning that you're going to kind of be recording it, but you don't want to include any transactions that might have already happened for that day. Let's say that we'll pretend that this is as of tomorrow, so the posting date would technically be tomorrow, but the cutoff date we could make be as of the end of the business day that we want to record. So in this case, 4/8, so Monday. That way, anything that happens as far as transactions beyond the cutoff date are not going to be showing on this screen as far as their values, but the posting date would technically be as of the date that we are putting in there. So in this case, 4/9, Tuesday. That's essentially the date that we would expect to see it in the checking activity when we look at our bank deposit. Now, there's a couple of other things I'm going to do here. First of all, I'm going to bring this back to 4/8 just to keep everything simple. But if you did want to use this program, not that this is the focus of the webinar, but we're going to have time today. If you wanted to use this to actually count the drawer, you can make the selection of which drawer you want over here to the left. So right now we're currently on computer number 1. If I was on computer number 2, notice how these amounts over here have actually zeroed themselves out because no activity has actually happened there. So we could go drawer by drawer or by not selecting anything. So if I hold down the control key and click on the computer that I selected, it'll essentially unselect it, and then it'll basically go back to seeing all entries. You could also right click and say clear selections if that helps at all. So it's basically saying there's going to be a total bank amount of $69.55 that it wants to deposit. Notice how there's a bank total as well as a clear total. If, as you're counting up the drawer, and by the way, I should finish my thought. If you want to actually count the drawer, you can right click and there is a count drawer function. I think I might have talked about this in the module mechanics webinar, but basically that's the idea here. So you could actually count in the actual bills and so forth that you are counting out of the drawer, and then whatever you tally up here. So let's say it was that 10 and that 20, then maybe you had an extra 1 in there, you could add that. When I say okay on this, notice how it's going to show still a clear amount of $30, but now a deposit of 31 with an over or short of $1. And notice how down at the bottom, the bank total is now $70.55, but the clear total is $69.55. So basically, if there is any difference between what's going to clear, because we want to clear that amount out no matter what, you can't actually even click into or change those amounts in the clear amount column, but you can just go in for here and change what the deposit amount is. Notice how I just click right in there, change the amount. So what this would essentially do is this would make a $30 credit as well as a $39.55 credit to 109 and 109.2, and it would make a $69.55 debit to checking account number 1. That's kind of the way that works. If there is an imbalance, so let's go back to the 31, it's still going to post the $70.55 debit to the 108 account in the checking account, but it still needs to account for that extra dollar now. So what it's going to do is it's going to post a $1 extra credit as well as the $69.55 credit to the 109, 1 and 2 accounts. It's going to post that extra to an over and short account. I don't remember the exact ledger number, but it is in your chart of accounts, and it's defined via the system categories as well. So again, that's basically how that would work. Now let's say that you have an overall such a large amount of cash that you want to split that deposit. You don't want to necessarily put it all into checking. Maybe you do want to put some into another ledger account. Maybe you're not even depositing the full amount. Maybe you are withholding some to keep on hand. The idea there, let's go ahead and just bring that back to $30, is you can right click and you can split the deposit. So no matter what, we're still taking that money out of the clearing accounts. But let's say we want to keep $10 on hand. So you'll notice there is by default a 101-1 cash on hand. Let's go ahead and select that. Let's say we're keeping $10 on hand. So notice how it's taking that amount out of the 108-1. It's only depositing $20 now, and it's going to have another line item here now for 109-1. It's still pulling that full $30 out, so 20 plus 10 takes out the full amount of the 109-1, but now it's going to take that $10 and put it into the cash on hand. And the same thing could also be true if we do another split, and let's say we're going to put $10 into savings. We go ahead and select the savings account, put $10 there, and now it's only got $10 going into the checking account, $10 staying in cash on hand, and $10 going into savings. And I shouldn't really say staying is cash on hand. These are all, when it's all said and done, grouped as cash on hand and bank, so they'll all technically still show up as that amount when you're looking at your balance sheet, but this is ultimately defining exactly where those balances lie. So ultimately, we're going to say that there's now a $10 amount sitting in the cash on hand and bank, or kind of like a petty cash, if you will. There will be $10 going into checking, and there would be a $10 going into savings. Now, also there is that $39.55 going into the checking account. So I'm going to go ahead and save this, and then let's go ahead and see what it looks like. So we'll save, and now if we go and take a look at what has actually happened with Ledger, I'm going to go into the chart of the general ledger reports of list ledger by reference. I'm just going to do this for today through today and show this up to the screen just so that we can see basically a snapshot of our ledger activity for the day. Oh, and I completely blew up the report. But basically what it would be showing, like I said, this is a brand new system and I probably still have a few kinks to work out, but basically what it would be showing is those ledger amounts sitting as a $49.55 deposit into checking, $10 going into cash on hand, $10 going into savings, and those amounts then came out of the 109.1 and 109.2 accounts. That's basically the idea there. So that being said, then, if we were to go and let's say it's at any point throughout the month, during the month or even at the end of the month, we're going to go in and we want to reconcile the activity in our local books for our checking account specific to what the bank is showing. So if you practice good bookkeeping, you know this is basically referred to as balancing your checkbook. How many of us do it? Not me. But anyway, that's what you would probably want to be doing, of course, if you want to make sure that there's no weird activity happening with your checking account or anything along those lines. The way that this works then is staying in modules. If we go to Ledger, you'll notice that there is a program called bank reconciliation. And the way that bank reconciliation works is it wants to know which checking account you want to reconcile. And this is again referencing those ledger accounts that you have in that system category 1818. So we'll go ahead and we'll select checking account 1. Now, if you are going off of an actual bank statement for your checking, you would put in the closing date that's off of the bank statement. So let's just say it's for 30. The opening balance is, let's say, 0, and the ending balance is 45.59. I forget exactly what the balance actually just was there, but we'll go ahead and we'll continue with that. Now, what this will basically do is this will break this up into amounts to the left and to the right. Over to the left is your payments and checks, and then over to the right are your deposits. Notice how to the left, there's the check that we wrote for the $50 to Staples, check number 5001. You can see that right there. And then there's the deposit that we did of the $49.55 to the checking account. Recall how it was going to be $39.55 of checks as well as $10 in cash. And the way this works is, you'll notice this is lumped together as cash clearing and check clearing. If there were any other deposits being made, such as credit card deposits or things like that, they would be specifically listed together in that fashion. Now, exactly how that works, I'm going to show you in just a moment, but I just want to make sure this makes sense here as far as how this works. If you're familiar at all with any other way, shape, or form in which you balance your checkbook, you would have a list of all of the activity in and out, so deposits and checks, and you would basically go down the list and you would check mark which ones have cleared, and the ones that haven't cleared you would not check, and those would essentially float to the next statement period. So hopefully by the end of April, activity from the 8th would have cleared at that point. Notice how there's a statement balance and a statement difference, and then a ledger balance and a ledger difference. Now, the reason this is kind of showing up as basically 55 cents off is because I messed up that amount that I just did. So there's the 49.55 and the 50. So that actually should have been 55 or 45 cents off in the other direction. That actually is coming, by the way, from the amounts that you put into that initial entry. So down here at the bottom where it says modified balance, you could put in a new opening balance. Let's say it's whatever it started off as, $37,000, I think, and then whatever the new ending balance would be. So that's 37. I don't even know what the math is. I'm just going to say it's 49.55. That should be, relatively easy to figure out. But again, you can see how this is basically making adjustments there to those amounts. It's not actually making entries against your ledger. This is strictly for comparison purposes. So basically, those amounts are coming not only from the ledger activity, but then also back from that first tab where you put in the beginning and ending balances from that statement. If you're not going off of a statement, typically what you would have is basically a list of activities. Say you're looking at your online banking and activity, you would go to whenever it was basically the last time frame in which you cleared, and you would look for the beginning balance then, and then whatever the ending balance is as of today, and of course the bank closing date or the statement date would usually be today. So that's kind of the idea behind that. Now, the other thing that can happen here is, let's say you're going through the list and you notice that there is a fee or some other kind of activity in your online checking or on your bank statement that didn't get accounted for in AIM-SI. So basically what you would need to do is you would need to come into AIM-SI and you would need to make an adjusting entry. So what you can do is, while this screen is up, you can go in and you can do a check disbursement or a journal entry or anything like that. and basically put in what that entry should be. So let's say that there was a bank fee as of the first of the month. So we'll go back to the first of the month in general journal entry, and we're going to have this just be a GJ journal entry for bank fee. Again, the reference number can be whatever you need it to be. If you need more details on how general journal entries work, check out that module mechanics webinar that I did on general ledger. But in this case, we're going to go ahead and have it be that 1081. The description is going to be bank fee. And because we need to remove an amount from checking, that's going to be a credit. Let's just say it's $5. So we're going to proceed with that. We're going to add another entry. We're going to keep all of that initial detail the same, so the same date, the same location, tax authority, source code reference. But let's go ahead and I don't know if I've got an actual ledger account for fees. We have a reverb fee expense. Let's just go ahead and we'll make use of that. Normally, you probably would have a ledger account specific to bank fees, but we'll go ahead and put that in as a $5 debit, and we'll proceed with that. And then as soon as that total is 0, we could go ahead and save. And then you'll notice that's now actually showing up without me even having to do anything extra. That's coming over here then for me to clear in my payments and checks and basically other types of fees. So any activity that you do against your checking account, as long as it's within or prior to the closing date, would show up here for you to clear in essence. Now, by doing this bank reconciliation, this doesn't actually, again, post any activity to your ledger. It strictly is finding the entries that are already there and denoting whether they've cleared. So then when you come into this program again the following month, it's not going to re-show, if you will, those ledger transactions that have already been cleared on previous bank statements. Now, if you need to come in and basically re-review those clearing entries or not, you could come back into bank reconciliation and put in the exact same bank closing date. So in this case, 4/30, and what it would do is it would bring you back to all of the activity that you had checkmarked so that you could go in and you could make adjustments if necessary. So that's kind of the idea behind that is, again, it's not actually posting entries to your ledger, but it's a way of essentially making sure that the activity is the same in your AMSI accounting as it is with the bank's accounting. Connie is asking, if you have been on the system for years and never used the bank reconciliation, what do you need to do to get started? Now, my recommendation, Connie, because bank reconciliation doesn't, again, actually make adjusting entries to your accounts, actually thinking about this out loud, Connie, probably that's going to be an it depends answer. If you've been using accounting in general, so you have been keeping track of all of the entries in and out of your checking account, you just haven't been using bank reconciliation, you've been closing your year ends, etc., then probably the easiest thing to do is just go into a previous bank statement month. So basically you go into bank reconciliation. Let's say that you're doing this as of the beginning of the year, and you want to kind of go forward from either your fiscal or your calendar. You could do the prior month. So if you're starting in January, you could go in and you could say, bank's closing statement date is 12/31 of 18. Don't even worry about the balances. You're basically just going to go into this program and you're going to essentially right click and say clear all prior to that date, and you basically put in today's date, or excuse me, 12/31 of 18. Do the same thing over for your deposits, and that'll basically just mark those all as cleared. And then when you then go forward from that day, you would then have just the activity to your checking account that should coincide with the bank activity that was deposited and expensed as far as your checks going forward. Now, again, if you have been doing year-end closes, this has probably been closing all those amounts as well, but if they are still showing up, this is just a great way to essentially lump clear them, if that makes sense. Now, if you haven't been using AMSI's ledger, and you've just been kind of using outside accounting solutions and you're wanting to get started with AMSI, you're going to have for lack of a better term, a crap ton of activity in AMSI's ledger that's probably just sitting there for years and years and years, because AMSI still is doing journal entries even if you're not realizing it. So first and foremost, what I would recommend if this is the case is to go into AMSI. There is a solution you could essentially do to wipe out all that prior ledger activity. If you go to let's see, I believe it's modules and ledger and utilities. No, it's maintenance and ledger and utilities. And there's a delete ledger detail. So you basically go in and you would delete AMSI's ledger detail prior to the date that you want to start. So if you're doing this as of this year and you didn't use AMSI's accounting prior to this year, you'd put in 1/1 of 19. And all ledger activity 12/31 of 18 and older would get wiped out. You would then want to go in and you would want to post your beginning balances in your ledger accounts as of 12/31 of 18, so that going forward then, all of the activity you've been doing since then not only will have the correct balances in the ledger accounts, but then because AMSI again is tracking that activity, you should be able to start reconciling that activity against your checking accounts. And if you needed to, you would want to make sure you define which accounts actually are your checking accounts, so that that way they'll show up in here in the bank reconciliation program for you to reconcile. That does kind of lead me back full circle. Thank you very much, Connie, by the way, for the question. That does lead me back full circle to that ledger account that we had seen there called vendor prepay clearing. Now, this vendor prepay clearing account is not a checking account per se, but the reason why that ledger account exists is essentially a way for you to keep track of payments you make for things other than your checking account. Say, for example, with a credit card that you make a payment with, you pay off an accounts payable balance, or you pay for purchases at the business supply store. You can use that vendor prepay clearing to essentially accrue what those balances are, and you would deposit them, or expense them in the same way that you would expense other checking purchases, except it's not actually impacting the balance of that 108 account. It's actually going to a liability account. I believe it's 201, either 201.90 or 201.99. I believe it's 201.90. When you then get your credit card statement, you would go in and do a journal, or an AP invoice against that account to essentially bring it out of 201.90 and into 201.01, which is your accounts payable. You would then pay that with the actual checking account. But the reason it's there is so that you can use it for disbursements. You would really not want to do the bank reconciliation routine for that ledger account. You could still technically use it to look at what those amounts are, but they're going to be basically the opposite of what you would expect, because that's looking to expect activity as of an asset account. The deposits, which would normally be debits in an asset account, are actually credits, of course, in a liability. So when it looks like you're taking money or putting money into that account, you're actually using that money to purchase things, and then the opposite is true. When you're essentially, what you would look like it's posting payments against it in the form of checks, you're actually moving that balance out of the account and into, let's say, the accounts payable account. So I wouldn't recommend using bank reconciliation for that vendor prepay clearing. But I would recommend keeping that as a checking account, so that if you ever do need to purchase something on credit card, you do have it in the drop down as a viable credit option in check disbursements, etc., things like that. So hopefully that makes sense. Again, that's basically what I wanted to talk about today as far as checking accounts and that bank reconciliation program. Tomorrow, we won't have a webinar tomorrow, but on Wednesday, I believe, and I don't have the schedule in front of me, I have it out on the website. Actually, I do have it in front of me. Let me just go ahead and pull it up here. So accounting. So we are going to be talking about those ledger clearing accounts on Wednesday. So we're going to be getting into the real nitty gritty of not only all those 109 clearing accounts, but other clearing accounts as well. On Friday, we'll be looking at how to create your own custom accounting reports. So definitely stay tuned to that if you need some advice on customizing things like your balance sheets or your income statements. Not next week, but the week after that, so starting on Monday, April 22nd, we're going to be looking into setting up and using AMSI's budgeting tracking features. On Wednesday, April 24th, we'll be looking at what I always like to call the human element. So computers are only as good as the folks who are operating them, and we're all subject to spacing off or miskeying entries or anything like that. So if you ever need to make adjustments, reverse out journal entries, things like that, we're going to be looking into that on Wednesday, April 24th. And we're going to wrap up Accounting April on Friday the 26th with looking at accounting periods, how those get closed out, and a year-end close. So once again, thank you so much for attending today's accounting awesome sauce or astonishing accounting. I forget which label I actually am using for these webinars on checking accounts and bank reconciliation. Hopefully that made sense as far as how that works. So again, bank reconciliation, the most important thing I want to try to take away from that is that that's not actually posting journal entries when you are flagging those as cleared. It's simply as flagging them as cleared. And the going back to that statement difference versus ledger difference, that's just because I don't have beginning balance entries for my checking account because this is a brand new system. If they are off like that, then you know that there's a beginning balance missing from your ledger, whereas the differences should basically just be based on the amounts that you key in for the beginning and ending balances. So again, hopefully that makes sense. If there's any other questions I can try and answer, feel free to go ahead and punch those into the questions box on the GoToWebinar toolbar. Otherwise, I hope you have a great day, and we'll probably see you on Wednesday. And by the way, the other thing I do want to mention is if you do have any other questions regarding AMSI pertaining to these webinars, if you didn't want to ask the question during the session, or if you forgot to ask the question during the session, you can go ahead and email me. It's training@technology4retailers.com, and just in the subject line, you can put in the date of the webinar, the title of the webinar, and that you have a question. Go ahead and ask the question. I'll do my best to answer it as quickly as I can. Not seeing any other questions coming in. I'm going to give it about one more minute just to see if anyone out there is still typing. Looks like folks are kind of starting to exit the session, so I'm going to assume that we're going to wrap up here. Again, if you didn't get a chance to ask a question, or if you thought of it afterwards, just go ahead and email me. There will be an email going out in about an hour or so with a link to today's recording, so you can check that out as often as you would like. Again, thanks so much for attending this session of TriTech University, and I hope you make it a great day.